Ever wondered how some people manage to outsmart the entire Indian share market system and walk away with millions? Imagine the audacity, the cunning, the sheer brilliance it would take to pull off something so audacious. But it's not all just cunning and audacity. These scams are often so massive, they rock the very foundation of the share market. You may think it's something out of a movie, but it's all too real. Today, we dive into the world of scams, revealing the top 5 that shook the Indian share market. Starting our countdown at number 5, we have the infamous IPO scam of 2005. Spearheaded by a crafty trader, Rupalban Panchal, and her associates, they exploited loopholes in the IPO allotment process. They created thousands of fake Demat accounts to get shares at discounted prices. This manipulation led to a massive loss for retail investors and shook the Indian stock market. The aftermath saw stringent regulations implemented to safeguard investors. This scam was a wake-up call, demonstrating just how vulnerable the market was to manipulation. Moving on to number 4, we encounter the Ketan Parekh scam. This infamous debacle was orchestrated by Ketan Parekh, a stockbroker who cleverly manipulated the market. Using an intricate web of borrowed funds and inflated shares, Parekh managed to deceive and defraud on a grand scale. The aftermath was catastrophic, leading to a monumental crash in the stock market. With millions lost and trust shattered, this scam left a lasting mark on the market. At number 3, we have the notorious Satyam scam. This scandal rocked the Indian share market when Satyam Computer Services chairman Ramalinga Raju confessed to manipulating the company's accounts. This deceit inflated profits and assets by over $1 billion, leaving investors and the market in a state of shock when the truth surfaced. The fallout was immense, with shares plummeting and trust in corporate India severely shaken. This corporate fraud demonstrated the need for stricter oversight and transparency to protect investors. Coming in at number 2 is the infamous Sahara scam. In a plot that shook India's financial sector, Subrata Roy, the man behind Sahara India Parawar, masterminded a massive manipulation of investor funds. This scandal caused a shockwave in the market, leaving countless investors with substantial losses. The aftermath was filled with legal battles and financial heartache. This scam was a stark reminder of the risks associated with unregulated investments. And finally, the most devastating scam in the history of the Indian share market, the Harshad Mehta scam. This monumental fraud, orchestrated by Harshad Mehta, unfolded in the early 90s and changed the face of Indian finance forever. Mehta, a stockbroker, used a simple yet effective strategy to manipulate the market. He took advantage of the loopholes in the Indian banking system and fraudulently diverted funds from banks to the share market, artificially inflating stock prices. His tactics were as audacious as they were devastating. The impact on the Indian economy was profound. The stock market crashed, wiping out millions of investments overnight. Banks were left high and dry, their funds siphoned off without a trace. The ripple effects of this scam were felt throughout the country, causing a significant economic downturn. This scam not only shook the market, but also the entire nation, leading to significant reforms in the Indian financial sector. From the IPO scam of 2005 to the Harshad Mehta scam, these frauds have left indelible marks on the Indian share market. Each scam, from the crafty manipulation of IPO allotments to the infamous Big Bull scandal, has had a profound impact, shaking investor confidence and prompting market reforms. In the aftermath, stricter regulations have emerged and transparency has increased. While these scams have led to stricter regulations and increased transparency, they serve as a reminder of the importance of vigilance and due diligence in the world of investments.